Welcome. UK inflation data is out 9:30 a.m. Tuesday, 12th of September. If economists' estimates are correct, the last 2 months where readings have been off the recent highs may begin to turn round again with an uptick across the board. Economists are looking for a reading of 2.8% year on year, driven by an increase in transportation costs as both diesel and petrol prices push higher. Let's take a look first of all at this chart behind me. This is sterling against the US dollar. The surge in inflation has mostly been generated by the drop in sterling against both the euro and the dollar. But as you can see, if we look back, you can see the big drop that we saw June last year with the referendum result, and that's really what's been behind most of what has been this rise in inflation. But you can see that if we go to the beginning of this year, the way in which sterling has risen against what is overall a weaker dollar, the weaker dollar story is another side to this rise that we've seen in sterling against the US dollar. Now, the most recent price action has seen the lows of 127.80 push higher to once again push beyond the 130. We're now trading at 132.12, around about 20 hours or so before the release of that data. Does it have the impetus to push above this recent high here of 132.68? Well, if we get a reading that begins to stir more at the Bank of England to talk about a potential rise in interest rates, then I think there is the possibility we could well see sterling push higher. But as I say, this most recent rise has really been behind this weakness in the US dollar, the other side to the story. So let's look at sterling against the euro for another better example of just how weak sterling has been. And you can see that recently, the recent highs of 120.04, we're now trading at 110 for sterling against the euro. There's been this uptick in sterling as well recently. And as I said, as more people begin to believe that potentially there is this possibility that the rise in inflation could well drive interest rates higher at some point in the future, markets perhaps may be getting a little bit ahead of themselves and driving this higher. So where do we trade this? Well, let's go back. Now we've seen the pattern involved here. Let's take a look at this. If you want to go long sterling against the US dollar ahead of these figures, and you think that potentially we could well see this recent high of 132.68 beaten, in other words, that sterling rises to beyond that, you can see that that would take us up to the highest we've seen sterling all the way since the 12th of September last year. So if that happens, you would want to be putting a stop a little bit below where we saw this most recent swing low here, which coincides with the blue line, which is the 100 period moving average. So you'd be looking at putting a stop around about the 129.10 level, just below that. If you were going to go long this, and long, you'd want to see this level of resistance here beaten if you get a stronger number. If you think that we're going to get a weak number, that the numbers are going to go back to 2.6%, which is what we saw in the last couple of months, and you see sterling ease off a bit, you're then looking potentially here at the next line of support at 131 and then 130.48 as the next level of support coming in, and you want to be putting a stop just above the high point here at around about 132.70. Going back to sterling against the euro again, similar sort of thing. If you think you're going to go long here, you're looking potentially at being possibly stopped or certainly given a little bit of resistance at 110.50, and you'd be putting a stop just below this level here. Weakness, any weakness on from this, you'll stop just above this level here at 110.50, 52 or so forth as a good place to put your stop. And you'll be looking at support and a target there at 107.45 if you think this is going to be a particularly weak number. So that's how to trade this number against both the euro and the dollar. As I said, the downside to the economy is that wages are failing to keep pace with this rise in inflation. And that's one thing which is really keeping a lid on other aspects of the economy. But the Bank of England meets this Thursday to announce its latest rate decision. No change forecast, but with Michael Saunders last week talking about the need for higher interest rates here in the UK, could the Bank of England beginning to start thinking about the possibility about moving interest rates up, possibly even at the beginning of 2018? We'll certainly get more information on that on Thursday at midday when the Bank of England publishes its minutes of this latest interest rate meeting.